I'm thrilled to welcome you to this exciting panel discussion on the future of innovation, AI's role in startup growth and investment strategies. Today, we are diving into how AI is reshaping the startup ecosystem from transforming growth strategies for startups to improving investment and processes. We choose this topic because AI, particularly generative AI, is transforming industries across the board, from customer support to Hollywood and from major retail brands to technology giants. However, its role in the startup ecosystem remains largely undefined, and conversations like this are crucial for exploring how founders, investors, and other stakeholders can effectively harness AI to shape and accelerate growth in this evolving landscape. We have an exceptional lineup of panelists today, each bringing a wealth of knowledge and unique perspective to this important topic. Before we begin our discussion, I would like to extend a warm welcome to our amazing panelists. Let's start with brief introductions. Please share a bit about your current activities and how you have been involved in the startup ecosystem. And it would be wonderful to learn how about your experiences and contribution to this dynamic field. So I would like to invite Sid Mohaseb, Seren, Bill, and Christian to join our conversation today. Hey everyone. So how about we start with Seren? Seren, you want to go first?
Sure. It's a very big responsibility to be the first, but I'll do my best. Thank you, Alex, and thank you for inviting me to join the panel, as well as also regarding the announcement just earlier. Super excited to collaborate with the Accelerator program, so which we think is really, really important to give more access to people who have motivation and spark in their eyes and want to become a next best entrepreneur with their ideas. So thank you again. From my background, I've been in science, technology, entrepreneurship field for over 2 decades already. So I started in a science park and saw really closely how this kind of technology-intensive companies were built, saw their successes, their failures, and kind of got really drawn into the overall startup ecosystem, which was just so exciting and innovative and really making a change everywhere. So after working there for a while, I started my own startups. So I kind of went from support structure side to actually being the entrepreneur myself. And unfortunately, that one failed, as they do. But after that, I kind of got back to the support or the kind of fundraising side. So this is where I'm currently working at Dealum, which is their platform for early stage capital, and helping those startups and entrepreneurs and founders to fundraise. So kind of I have done almost all the full circle now, and hoping that with my kind of knowledge and background, I can make this fundraising and especially the early stage capital raising much more transparent, efficient, and effective for everyone.
Fantastic. So maybe on my screen, I see Christian next to you. So Christian, how about you go next?
Sure. Hey, everyone. Thanks for having me, first of all. Nice to meet everyone on the panel as well. And for everyone watching, Peachscore is awesome. I discovered Peachscore when I was the director of an accelerator program here in Los Angeles called Startup Boost, and built a relationship with Alex, and what they're doing for the ecosystem is just awesome. My background has been a little bit diverse. I basically 15 years ago decided that working in a nice job was not for me, at least for the long term. And then I kind of had this long-term vision of like being an entrepreneur. 3 startups, failures, and sales later. Here we are. I had actually built my first startup as a non-technical person, like I'm not a coder. And that's really what inspired me to build the company that I'm currently running, which is WeAreNoCode. It teaches people basically how to build MVPs and products, which was the biggest challenge I was seeing with no-code tools, and now with AI coding tools as well. And yeah, it's a super exciting time for generative AI, specifically in the space that I'm working in, which is more on the product side. And what else? Started a YouTube channel a couple years ago, and that has kind of exploded. It's been one of the biggest drivers in the business over the past 12 months. We went from 20K to 170K. A lot of work. It's not easy, but it's been really interesting to see how that has played a big part in our journey. I'm also launching another software business because I like pain. And yeah, so that's in the sales tech, leveraging AI. So yeah, excited to be here today and have this
Fantastic.
conversation with
Thank you
everyone.
so much for coming. Sid, you want to go next? You are the next on my screen.
Sure. I'm Sid, and I guess my claim to fame is that I've been around the table. I've started 5 or 6 companies, exited 3 or 4 of them, have been an investor for almost 30 years now. I was the president of Tech Coast Angels, which is the largest angel service entity in the United States. Probably have seen thousands and thousands. I used to see like 2,000-3,000 deals a year.
Wow.
So you can do the math. I did turnarounds for about 10 years. That's carving out businesses and buying businesses from the likes of DuPont and so forth and turning them around. I was a consultant, a partner of a consulting firm, helping really big companies, the likes of Motorola and IBM and Ford Motor and Toyota. They were all my clients at one point or another. One of the companies I sold to KPMG became what they now call the Lighthouse, which I understand does more than $250 million in revenue now with a couple of thousand people. And it is their data analytics shop, which started with us as the core, the company that they purchased. I serve on a number of different boards, from AI responsibility and trustworthiness companies to various kind of analytics driven platforms and so forth. I teach at USC, both in the engineering school and in the business school, and I teach data-driven strategy and data analytics consulting. And I have a number of articles at HBR and London School of Economics about this topic of use of AI and use of analytics. My father, about 30 years ago, when I was studying at USC as well, said, "What is this operations research you're studying? What is it good for?" And I couldn't explain it. About 10, 20 years later, I said, "You see, it's now hot. It's called data science." So I'm happy that I was able to suffer through it until it's cool. Pleasure to be
Amazing.
with you, Alex.
Thank you so much for coming, being with us today. Bill, I think you're the last.
Hi. Yes. Good morning, everybody. Good to meet you all. Bill Berry, CEO, founder of IgniteGTM. So we are at the core, we're go-to-market advisors. We do a host of different things, right? In the early stages, startups need, a lot of resources, a lot of guidance. So not only go-to-market, we help with the fundraising aspects, but then also business development. We invest in VC funds through our fund of funds, right? So that's the second part of our business. And really we try to wrap it up and build our ecosystem through events. As Alex mentioned, we do a lot of events. Not that we want to be a pure play events company, but somehow we built this reputation that everybody likes our events. So we keep, we're trying to be a little bit more strategic in how we plan these out, because we do want to make sure that we open a lot of doors with the startups that we're working with. My background before this was 20 plus years in and around the data centers. So what we call the clouds now, networking, is really where I grew up from a technical standpoint, always working with early stages, always leading the go-to-market side of the house. And really the superpower I think that's been developed is being able to kind of approach these go-to-market challenges with a first principle lens, right? It's about that first pitch and how do we open up doors and, get the first 10 customers to try the product, right? So that's kind of our specialty. We're happy to be partnering with Peachscore on the ecosystem front, because we can't do it alone. It does take a village, it does take a tribe, and we're really happy to be part of this one.
Thank you so much for having being here today,
Mhm.
Bill. So to kick things off, let me start with this question. So how do you see AI transforming the startup landscape today? Like, where do you think it can have the most immediate impact? Feel free to share your perspective either as an investor, entrepreneur, or both, as I'm sure you have been different part of the ecosystem over the course of your career. And we can start again from Seren, from top. If you want to start, Seren.
Sure. I mean, if we look at what are kind of the main pain points in that capital raising is, of course, making those matches between the founders and the investors, so the projects and the capital. And I think that's one of the things where, of course, obviously, the AI is going to help to make more accurate predictions, matching, to really dig deep into what is the investment thesis of that specific investor and find appropriate matches from the pool of deals. So we did just recently some data analysis on the applications on our platform, and from our statistics, out of 100 applications, only 6 get any attention from investors, and only 2 get funded. So you can imagine how big is the pool of deal flow or the volume of deal flow that the investors need to go through. And of course, in that case, you tend to kind of screen super quickly because there's just so many of them,
Right.
and you might miss opportunities, and you also tend to kind of apply your bias a bit when you do that really quick screening. So we think that from our side, AI really can help overcome that bias and notice the opportunities that otherwise would be just buried under the volume. So I think that's kind of one of the main things that allows investors to spot opportunities, not just kind of from the screening perspective, but also allows to monitor the progress of the startups potentially, and to spot just the right time when the exciting stuff starts to happen, and be there with their capital to boost it. So I think those could really add value to the ecosystem.
Yeah, completely right, especially because you have been in this ecosystem and see a lot of data behind the scene that no one knows, like how does it work. But working with a lot of angel groups and investors, I'm sure that you have seen a lot of challenges that hopefully can address by new advanced technologies. I would love Christian, now if you have any thoughts to share with us today.
Yeah, I mean, I'll start off by saying that what Seren said is absolutely true. I remember going through thousands of applications, and it was like, if you just, are a little tired for one of those hours when you're reviewing the first round, it's like you'll miss out on potentially one great deal. And that's all it takes really with investors, right? So I definitely think that's a front. But I'm kind of going to come from the perspective of the entrepreneur, and kind of from my own experience. Like back in the day, you needed a village to build a startup. And I've been seeing, I started seeing this movement happen when, open source happened in coding. Then to a level even further when sort of no-code tools allowed you to kind of like build, apps without coding. And now I'm seeing this with sort of AI coding platforms. So, starting with platforms like Cursor, but now Replit, this other platform is released. They're basically a deployment platform. They've released like full-on, code your app with AI. And now there's even platforms like Bolt that are just completely blowing, like don't even go and look up this platform. You're going to waste 3 days if you do, because you're like, I'm a coder now. And of course, you need to understand the fundamentals of code behind a lot of what you're doing regardless. But basically, the barrier to entry with generative AI is incredible. Then I see the sales. So it's like build the product, which has always been a huge pain for entrepreneurs. A lot of that now is very accessible to people, especially people who are not technical. And that's 99.7% of the world. Then we have like sales, and like there are all these AI go-to-market tools, that allow you to do honestly crazy things as a one person. Then design, Figma just released their AI to be able to generate designs. Canva is going really hard on AI. I mean, AI basically is just going to start living behind everything when it comes to building startups. And so learning the right tools is becoming important, right? In a world especially where, like, let's face it, most founders will not get funding, and most investors are expecting them to generate revenue, meaning that the burden of, like, go out there, test and validate, then like build the first product, then go out there and get sales, and then actually have like a first channel that's starting to regularly get sales. Like, that's all on the founder. So I'm seeing kind of this gap that's starting to happen. I think that AI is like, I'm still completely for like investors and all of that. I'm not against it in any way, shape, or form. But basically, we have to go further as entrepreneurs. We have the capacity to do so. And right now, there's this huge opportunity, which is kind of like, I remember thinking like 15 years ago when I started my entrepreneurial career in SaaS, like, oh man, I wish I had learned how to code. And now it's like I'm a kid in a candy store. I get to talk about all these cool tools on YouTube. And it's like the bigger problem is almost, how do you not spend all day playing around with 1,000 tools? How do you figure out which ones are the right ones for you? So I think AI is just like gonna not even be talked about as AI in a couple of years, simply because it really is behind everything, and we're just not going to be like pitching startups as like AI this, that, the other. It's just going to be like, yeah, naturally you're going to have AI in the background of most things in your company.
Yeah, completely. All your points make sense, and it's already happening in many platforms. Sid, you're next. Would love to hear your thoughts.
Sure. So I think it might help if we divide things up a little bit. One is AI, startups, and productivity. Like, how do we code faster? How do we do this thing faster? How do we sell faster? How do we do accounting faster? How do we... that's one component. The other is AI being embedded in what they do. That is, they're an AI company. They have something, and the fact that you use a productivity tool doesn't necessarily make you a company that's generating valuable AI capabilities. The first part, I think, is quite clear. It can enhance productivity quite a bit at different levels. You can move faster, you can code faster, you could do a lot with less people. It's a productivity capability. The second is now an absolutely confusing, nonsensical. I reminded of year 2000. Some of you are pretty young. I was then even investing. That's 20 some odd years ago, when the internet was boosting, and everybody who had a site was a .com. Oh, this is a .com company, and it was crazy. It was crazy, and a lot of investors who are my age or who are seasoned are looking at the world from that filter. They say, hey, hold on one second. I've seen this movie before and I've lost money and this is nonsensical. Show me, show me, show me. So you see a lot of noise in the market. Everybody, I mean, I was listening to the radio the other day, and this guy says, "We are the first carpet cleaning company powered by AI." Heck, well, it's just crazy. So what that does, it's not just helping you lose, helping the investors lose focus. It's also helping the people who are the customers lose trust. It's just confusing. So the problem there is people are the entrepreneurs are losing the focus on what value they're driving to the customer, and focusing on this labeling of AI this and AI that. And let me be a voice of reason. Investors may be dumb, but we're not that dumb. So we start backing off and say, oh, okay, show me. I don't trust them. So not only you're hurting yourself because you're not focusing on the actual value delivered and what people would buy, you're wasting time in raising capital. The third view is is if we look at it from an investor perspective, an investment raising capital perspective. Selling equity is just like selling a product. There's no difference. You're just selling a piece of your company. It's the same thing. So you're raising capital, that means you're in the sales business. A sales business requires targeting, requires marketing, requires positioning, requires a funnel, requires all of that stuff that is in selling anything, from water bottles to computers to whatever. You're just selling equity. Can sales tools be useful? Absolutely. Can those who are powered by AI and somehow another? Yeah. But there's again a lot of noise there in terms of, okay, if I go to LinkedIn and put 3 keywords and boom, I have this list of wonderful things. It doesn't work that way. So still the art of finding the right chemistry between the investors, the right of mixture, the right of success factor, all of those stuff makes sense. Can you be more smart in targeting? Yes, you can. Lastly, it's the view of the investors, which we've been talking about, and Seren started with it in terms of, can we find a deal from an investor perspective? Again, we are a buyer, as in a way. So if the entrepreneur, the company is selling their equity, the investors are buying that equity and they want to buy the best deal. If I'm in the real estate business, I want to find the best property. If I'm in the whatever I'm in. So if there are tools that increases the probability of my success, you bet that I'm going to go there. But it has to reasonably increase my probability of success. And so let me give you a plug, because I've known Alex from the days that it was on a piece of paper, and I can claim that I had something to shape his mind or contaminate his mind in this thing. Is being able to actually score, being able to actually see the various dimensions of a company is significant, and it provides not only just a measurement of how well I'm doing, but a measurement of where I can improve. Everybody says focus on your strength. That's it's great, but you already have the strength. You need to identify the weaknesses, and either you partner up with somebody to do that. You identify some resources to hire. Figure out what doesn't work, because the investors are looking at the weakness. So if you divide it up that way, you could see that there's lots of opportunity in productivity, lots of confusion in introducing in the companies, lots of opportunity in selling equity if you're an entrepreneur, and from the flip side, quite a bit of opportunities in identifying if a deal is worth pursuing. I haven't seen any investor, and I don't think I would, but I haven't taken one of these driverless cars either. So call me old-fashioned. I don't believe that we are close into pushing the button and identifying a deal that says, okay, that's the one to go to. But I am a believer in data and analytics. I teach it. I've had companies about it. So I am a full believer in using analytics in terms of increasing the probability of success.
Thank you so much, Sid. Bill?
Yeah, a really good feedback. I think I nod my head with everybody, what you guys are saying. Kind of a fresh take, I think, from our side, the immediate impact that AI has in the space is that the first conversations are a lot better, a lot cleaner, right? If somebody shows up with a plan and outline, and they hand wrote it, and you could tell they didn't even use any kind of AI, and there's misspelling, but that's a bad thing. Like you gotta, that's kind of like the new standard. You got to show up with your homework really, really clean. The pitfalls of kind of the AI, there's two. One is Christian was mentioning this, like, hey, like you can kind of just get into this rabbit hole and you start building, and what about this? What about that? And you're like, now you're a craftsman, but then I heard somewhere, I was like, the art part is knowing when to stop and really kind of understanding, okay, this is enough for an MVP, and this is the problem that I'm trying to solve, right? I think there's a lot more other thing. There's we're on moving land. That's the challenge for both sides, the startups and the investors. Meaning innovation's happening so fast, right? A year ago, we were so excited about GPT wrappers. And then GPT 4.0 came in, and all of a sudden that whole category got wiped out. So now what, right? And I think that gives investors are a little bit more gun shy, going like, okay, is this going to last? Is there permanence? And then, like, you know, through our conversations with a lot of investors, feels like the focus is going two ways. One is on the infrastructure side, is, you know, that's a space that we play in. The picks and shovels. How do we make the next great big bottlenecks are going to be data center and energy and things around that? How do we make that better? The other category is applied AI. But in that applied AI, we better see some really significant impact, business outcomes that comes out of it, right? So for founders, I would recommend just making sure that you're always looking at what is the problem you're trying to solve. If you're going to be a carpet company, then be a really good carpet company. Don't do this carpet company with AI, like Sid mentioned, right? So, but yeah, so keeping, even though with all these great technology and tools, keeping your head straight of like, you're here to solve a problem, you're here to build a really good business, and investors are supposed to help you along the way. Keep that in mind as you kind of navigate through all these cool tools.
Amazing. Thank you so much for everyone for sharing their thoughts. So now let's talk about the role of AI in reducing cost. For startups in their earliest stages, every dollar and minute count, right? As everyone knows, like the cost of running the company and building a product has significantly decreased over the course of many years. If you look at the stats from the last 10 years, starting a new business, which used to cost on average between $50K to $250,000 for most industries, and require a larger in-house team, now has been reduced to $25,000 for most industries, right? Most industry sectors, because we have maybe hardware or biotech that costs more, but I'm talking about in general. So the question is, how do you think AI can reduce cost and improve operational efficiency for startups during these crucial phases? And by the way, this can also apply to investors, because look, everyone want to save costs, and the question is how AI can save costs for all these stakeholders within the startup ecosystem. So I would love to start again from Seren. Feel free to share your thoughts. Yeah, let's start. Take it from here.
Thank you. I mean, but I think Christian already mentioned that it's an excellent opportunity to bridge the gaps. So is it the skills gaps that you have in the team? Is it the knowledge gaps? Anything? So it's very cost efficient compared to actually taking the long road and hiring more teams. So there are lots of things that you can. You know, the productivity, which Steve mentioned, is much increased with the tools. Now, also maybe I'm also really liking the data aspect of what AI can do with the data, or how we can mine the insights very efficiently compared to maybe human hours and the effort you would need to put into it. So for startups as well, just go. It's both investors and startups really to analyze those big data sets that they have at hand. Also benchmarking against competitors or other investment opportunities, back tracking to your the rejected deals that you did before for investors, or what other startups have done and failed or succeeded. So kind of analyzing those like big sets of data really give you the insights to learn super quickly, not only from your own, but also from others' failures and successes. So so there is lots to do with it. And I think this kind of it really overarches all the aspects of the startup or any business, if it's in the startup or the investor scene. So yeah, that's kind of probably my 2 cents on this topic, which very much echoes what already Sid said. But
Fantastic.
Yeah.
Thank you, Christian. You want to go next?
Yeah, sure. Yeah, I mean, I think a lot of people lose track of the core goal. You know, I think Sid said it best. He's like, you know, people lose track of like, hey, how are you driving value, right? And so if we're talking about like cost reduction, let's talk about like, where are the costs, or how could we, there's kind of 2 things, right? It's either you make someone more productive, if we're talking about human capital, like how do you make that person more productive, or how do you, allow that person to produce more? I guess those are kind of the same things, but I guess there's some tools that, for example, like you could you could use a tool that allows the same salesperson to take on 10 times more deals with the same amount of effort. So that could be one. Another one might be just, oh, this person no longer has to take things off of their plate. So this person no longer has to do this other thing because that's already happening. And yeah, so I think that kind of like starting off by figuring out what are the main costs, and then trying to tie those real costs that you're actually having with like, okay, what are solutions that we could have? Great. And then let's talk about tools that we could use to solve that. Because if not, you're kind of like, oh, these things can make me so much more productive. There's this, these 10 different tools, and then it just ends up being playing around with a bunch of tools again. Or taking on more work. It's like, oh, I can easily do video editing, and now I'm going to start a YouTube channel. It's like, no. Let's figure out the real use cases and I think this is the problem that we have for the most part all the time. And one of the things that we help people a lot with is like, it's about knowing when to stop, as Bill said. Like, what is that MVP? What does it look like? Instead of us talking about like, I have this vision, I want to build this huge thing. Everyone comes with a vision, great. The problem is that people don't come with like, what's the first step to that vision? What is the product that delivers the core of the value that we can build with the least amount of resources? Because if that core of value doesn't get them over the pay line, you might as well scrap the whole thing and figure out a new product or a new customer to go after with that product. And so I think people kind of forget the first principles, like the bigger concepts. It's like, if you don't know, for example, if you don't have a customer and a specific problem, and you don't have an MVP that solves that problem, you're really, you got to figure that out. Like, if you have all those things, but you don't yet have the business model, there's like 4 big pieces, especially in the early stage, that if you don't get right, you don't get anything after that right. If you don't have product market fit, it's great to go to market and to be the best salesman in the world, but that's going to be very expensive sales cycles. That's going to mean like a lot of friction to market. Like, if you're going after 2 different customers, like your landing page says one thing over another, that means, a quarter of the conversion or 4 times the conversion, just because you've understood the fundamentals. And so, I think cost reduction, we can talk about every phase of a business, but really let's figure out like, what are the top #1 priorities we should be looking at right now. Bill helps people in go-to-market strategy. Like, that's something that people have to be super good at, especially at a specific phase in their startup. But if someone goes to Bill and they don't even know who they're targeting, or they're like, oh, we targeted like 3 or 4 different types of customers, and it's like, it's going to be a lot tougher for Bill to be able to help you to get to create that growth engine in your business. And so, I don't know. I always look from the perspective of the early stage. I think that each individual in any organization, like, I think everyone in the world right now should be looking at what they do specifically. And if you're a manager, you want to maybe do this with each one of your employees and be like, where are you spending a lot of your time right now? What is the most difficult thing? And then to figure out and to try to pair them with just one tool. What's one tool that would already get them to be 10% more effective? Start there. Don't start by saying, we're going to bring lots of AI into our company. So that's kind of the way I think about it. I think people try to just like, they get excited, they get lost, they play around with a bunch of stuff, and then they don't actually implement anything properly. So yeah, that's thoughts.
So you called Bill's name. So how about Bill? You go next.
Yeah, good points. So they were talking about the how this is streamline efficiencies, right, internally. It's very easy, like, to get these tools right now. You can do no-code tools, and you can start building things, and you build something called a Rube Goldberg machine. If you guys Google that, RUBE Goldberg machine, it's just it's been a term that just basically says you build a complex system, a robot, to do simple things. You know what I mean? So people usually do comics about it. It's been around for a while, right? So AI, you have the risk building just Rube Goldberg machines that just go nowhere. And like, I don't know, do you think an investor will invest in it? Which is probably the wrong question. I think if you're already kind of building that and you're asking that question, you're kind of on the wrong path, right? For us, obviously we want to streamline the efficiencies, but what I'm finding is that the things that we build that stick is the ones that we viscerally felt the pain of doing manually, right? You have to know how hard it is. Like Christian mentioned, like you do this thing so you can have one salesperson do the work of 10. Well, have you made 10 sales by hand? Like the actual onboarding, right? And if you don't know that viscerally, then don't build that machine yet, because you will just be ending up building a Rube Goldberg machine, right? So feel the pain and then build the solution to solve it. And remember, it's the outcome and the output that matters, not the input. Nobody cares how many hours you spent in this. Did it work, and how many hours did you save doing it, right? And from a product market fit, one of the things that we work with our startups to say, hey, like if you built this correctly, there's this magical thing that happens in the universe. You feel a vacuum, a pull of just like, holy shit, it works. And all of a sudden somebody wants it, and then two people want it, right? And then so keep building until you feel that pull, because then you might have something. So hopefully that helps.
Yeah, thank you so much for sharing your thoughts. What about you, Sid?
I guess I'm the old guy on the panel here, who has been through stuff from. I remember in the 80s, there was this thing we called the process reengineering. And I made a lot of money out of that because I was a consultant back then, and did that for a lot of companies. And the idea was, hey, take the fat out. Let's look at the processes. Let's improve it. 10 years ago, 15 years ago, they started calling it RPA. Same thing. And the fact is, as long as from the days of the Chinese Silk Road, there are three things in any business. It doesn't matter if it's startup or if it's IBM or Microsoft or Mr. Musk's businesses. There are three things. There's the zone of growth, there's the zone of risk, and then there's the zone of efficiency. These things are balancing out. I can get really, really efficient and put the company at risk, fire everybody. I can go, let's go sell, and compromise on the quality, put the company at risk. So the risk is kind of in between. If we're talking about cost cutting, we're talking about basically the efficiency part, but it bleeds into the other parts in terms of what you're doing. The problem now is, okay, so we use calculators 40 years ago to improve how we do things or calculate things. Before that wasn't there. It's not the issue of the tool, it's the issue of the purpose. And what I see a lot is this chasing the shiny new object that smart people who are smart. Oh, this one is better. Oh, this one is better. This one hasn't been cooked. They change it to a different system, and then this one is much better. Let me change it. So they never get to the efficiency part, and they never get to their managing risk. They're just creating risk by chasing this. This is better. And guess what? We're in the AI movement thing. Every day there's something better. So if you want to chase stuff, you would lose the productivity that you intended to start off with.
That's true. Yeah.
So stop chasing things. Yes, there will be something better. Just use this one, get the damn efficiency out of it, and it's not going to be 2 weeks after you use it. You got to let things sit.
Completely right. Thank you so much. And our team reminded me I have only 10 more minutes max, and so I have to cut the questions. But definitely, I would love to just before we end the panel to ask you to maybe after this demo day, maybe another day we can continue this conversation because I still have a lot of questions for every. For all of you. But let me just talk about like a little bit, talk about the risk and AI. So in general, investing in early stage companies involves significantly more risk compared to other asset classes. More risk, more reward, right? So, and especially in today's economic climate, where the banks offer 5% interest rate for savings, in US at least, alternative investments such as like real estate, gold, or even Bitcoin now are more often seen as a safer kind of like options. And statistics, I mean, if you look at the stats, it shows that a lot of early stage investors they from mid 2022 they moved and shifted towards late stage startup investment, as these tends to carry a lower risk of loss, right? So given this context, how do you think AI and automation can help mitigate risk for early stage investors, those that are still investing in this space, and in today's fast-paced and unpredictable market? And on the other hand, it would be very valuable to discuss how startup founders can leverage AI to reduce risk in their operations. So it's both sides of the market, like either light side or dark side, either you're a startup or investors. How do you think data-driven approach, AI, automation can really help these different stakeholders within the ecosystem? We can start from Seren again.
Sure. From investors' perspective, of course, speed of investment and being there at the right time and being attractive investment for the startups is that there's also competition on the early stage capital field on the investor side. So everybody wants to get close to the good deal as soon as possible. And it's not only angels who invest, but it's also early stage VCs and whatnot. So from angels specifically, I think their speed to investment or this kind of processing speed is super important to be reduced. And I think there is the opportunity for AI to really help somewhat to reduce the due diligence length. And from the other perspective, for how to kind of bring back that early stage capital to startups is having the ability to monitor and detect this kind of red flags when you have already invested. So there are chasing the patterns, for example, when startup doesn't send in reports anymore. Or having those kind of indicators when somebody, the big AI agent, will tell you that there is something going on. Please take a look closer to that. So they can jump in, they can help, they can provide their knowledge, their networks, any assistance to get startup out of that bad place. But when you have a really big portfolio, it's really difficult to track each and every single company in such detail and depth. So someone doing that for you and flagging the potential risks and problems, it would be really helpful and also decrease the risk of failure for that startup. For startups, I kind of wanted to also kind of take a moment to also say that whenever you're using any AI tools as kind of building value on top of it, not just as a vanity thing that you can put on your website and a banner to AI, but also to add value, then you always have lots of risk elements there which need to be considered, which is the cost, the kind of malicious cost pumping. So everything costs for you. So if you have someone building a script that pushes the button way too many times and you get the bill afterwards, all those things need to be considered. And of course, the data integrity and security as well. So if you're using some shared models or the big models, then how do you protect the data that the customer has given you? So there's lots of risks that need to be considered there and mitigated in a way. So just being mindful of how you implement your AI features or added value is really, really important and should be kind of taken seriously.
Yeah, amazing thoughts. And Christian, you want to go next?
Sure. So I think, I'll break it down into 2 categories. I'll just have a quick line for investors. If you want to reduce your risk investing in AI startups, know what you're investing in. For example, if you're investing in something that is using AI, probably that AI will continue to get better, and so will the features that they're using inside of their app. Great. But I would focus a little bit more on figuring out how likely are the people developing the core AI to kind of want to eat that sector. But I think that just focusing on traction for those kind of startups, like how well are they delivering value for their end customer? Then how likely is it that this the underlying like tech features are one day wanting to take it over? So for example, we're seeing some of these big LLMs like Anthropic starting to, you can code within Claude now. So there's stuff like that where it's like, okay, that might be a sector that's a little bit at risk over time, a little bit, maybe a lot of it, but invest in traction. Just know it's like all about the value to the customer. Invest in their traction. That's a proof of how well they might do. And as the tech improves, just make sure there's not too much of a risk on that front. And then if you're investing in AI and like you might just be investing in the deep tech, great. The deep tech is kind of it's the same thing as biotech. If there's a big breakthrough and this person invents the new like LLM for a very specific use case, then that will have huge amount of upside and value. And these are the kind of projects that require actually a lot of like upfront money, right? It's the same concept as like, before you needed investors because like I remember building like a live streaming platform. There wasn't just an SDK that you could use to like, oh, now we're doing live streaming too. It's like you had to build this from the ground up, and that cost a lot of money. And I think right now it's like either invest in traction or invest in the actual deep tech. I think for entrepreneurs, it's like the risk is you can reduce the risk. So let's say you're an early stage entrepreneur. Reducing the risk for me is like, how can we, I have an idea. Great. How can we go from that phase to, deploying maybe $5,000 to $10,000 instead of what I see over and over again, like hundreds of thousands of dollars, 2-3 years of a person's life put into something. So it's a huge amount of risk. The goal here is like, how can I invest maybe $5,000 to $10,000 into building my startup? I think the biggest thing for the early stage is like, learn how to be a little bit of a generalist just to get things off the ground, because it likely, if you're an entrepreneur, it's likely not going to be the last idea. In fact, you'll probably have another 10. And if you're always having to, depend on other people for the very early stage, then you're a bit in trouble. Whereas if you pull off that very first step yourself, it's going to give a lot of confidence to bring in the teams that are better at you at all the things that you don't want to actually be doing in the longer term. So it's just like, learn the basics about building, learn the basics about selling, and over a 10, 15, 20-year period, that's gonna be reducing the risk. AI tools just happen to be good for that, but the biggest risk for anyone with these AI tools is just like exactly what Sid said, losing track of the goal. Like we're using a tool for a goal. If you don't reach the goal, don't use the tool. And so my advice is don't watch my YouTube channel, because you might just find tools that are going to be exciting, and that excitement might play against you. Instead, it's like, maybe watch the videos, but don't jump into every next tool that improves. Because as Sid said, we're going to see a better iteration of every single product today in less than a year. I guarantee it. And that's scary, but it's also like, it's okay. It's like, don't spend 6 months choosing your CRM if 90% of CRMs do the same thing. And I think that's kind of like the goal. It's like, just figure out the core sets of tools that make you dangerous enough, and stop looking at tools. Stop watching my YouTube channel, please.
Completely.
I think that's the biggest risk I see for entrepreneurs.
What are your thoughts, Sid?
I think we've got about a minute. I just say one word: focus on value. The rest of it is just means to an end. Means to an end. Focus on what value you have a business. Focus on tools and stuff, and you're confusing yourself and probably getting yourself away from the end goal. Bill?
Thank you so much, Bill.
Yeah, on de-risking, like I mentioned before, the first conversations are a lot better now, right? Because there's so many tools to be able to kind of articulate your thought. So I think there's more tools coming. I mean, just even Peachscore, right? Like the startup having a Peachscore has so much more visibility as far as what they've done, what they know, what they don't know. So know that those tools are going to keep on getting better. So startups, you got to do your homework. You can't just say the GTM strategy is a black box and I need 300K for that for the next year. Like you're gonna have to be able to articulate, what does that mean? How do you solve the cold start problem, right? And those are going to be like, I think, better conversations for both sides. And then, yeah, and I echo everybody else's thoughts. He's like, it's a means to end, focus on the value. Don't build a Rube Goldberg machine.
Fantastic.
Solve some
Yeah.
things. So.
Thank you so much. Yeah, all you guys, everyone have amazing points for this topic. But I still have so many questions like to explore, like the role of AI in education, collaboration, due diligence. But unfortunately, time is limited. Otherwise, we could easily spend hours discussing these topics. I will follow up separately, so hopefully we can schedule a separate maybe session in the coming months or weeks to continue this conversation. But to wrap up, I would love each of you to share your final thoughts. Any advice, any suggestion, AI or outside the AI, domain, and with our audience, and and one prediction that is what is going to happen in the next 10 years in AI in any different industries. We don't keep you accountable for that prediction. We don't come back in 10 years, but we would love to just you finish your thoughts with one prediction along with your final thoughts about this panel. Seren, you want to go first? Or you can go second if you want. If you don't
want
me
to go first, Alex? I'll go first.
You go first, Sid. So
I'll go first. I'll go first.
Yeah, go first.
In 20 years, nobody would use the word AI because nobody uses calculators or other stuff that we use. It's just a fascination to scare people to. It's part of life, productivity. We have conveyor belts. We don't talk about conveyor belts. When the Industrial Revolution was, everybody was talking about conveyor belts. It's irrelevant. So in 10, 20 years, it's part of life. There would be something else, we'll call it super AI, IA, whatever, some other fantastic, capital letter, 3 words of capital letters or so. So that's the prediction. And I'll say what my value, remember, this is critical, and over 40 some odd years of experience, we don't sell, they buy. We don't sell, they buy. You don't have, none of us, as good as a salesman we could be, we don't have control over the decision of the revenue. The person who writes the check, reaches into his pocket and gives you money has 100% of that decision, 100%. And they have the reasons and they buy because of those reasons. You find out those reasons, you have a business. You try to just sell what you have, you don't have a business. They make the decision, respect that decision, deliver the value that they deserve and they like, and you have a business. It'll grow.
Fantastic. Thank you so much, Sid. Christian, you want to go next?
Oh, predictions, man. I'll give you a bunch. You can keep me accountable to them. I'm fine with that. If I'm right, I'll call myself a genius. If I'm wrong, I'll say we had no clue in those days. Yeah, I mean, for me, I think there's going to be a huge shift for high performers who realize that there's going to be a lot more self-employment, let's put it that way. A lot more people building on their own 5 to 10 million businesses, dollar businesses a year, with maybe 2 people and a couple of freelancers. Just because I think that there's frankly a lot of incredibly talented people in the workforce right now who are feeling a little capped. And so I think that with the help of some of these tools and with accessibility to being your own entrepreneur, I think there's going to be a huge shift of people moving away from kind of traditional, especially for people who are in high-paying positions, 100K plus, where it's like, you're giving your life to your job. It's not like you work like 8 hours a day. No, you're working like 12, 14, sometimes more hours a day. And so I think that there's going to be a big shift with regard to that, with AI coming in. I also think, as Sid said, we're not going to be talking about AI in 5 years. No, 10 years maybe. I think that no code and coding will be all AI based within the next 7 years. We will still have, like, I would be very scared right now. I would learn the tools right now if I was like a junior dev, because the jobs of junior devs are definitely changing. I think everyone's job as they see it today is going to be required for them to know how to do their job with a tool. So, and that's an opportunity if we take advantage of it right now. It's kind of a threat if you're the guy who, you know, is still putting Excel on their curriculum. You know, we need to kind of adapt to this new world. Apart from that, I think we're all going to live in flying cars, and they're going to be autonomous.
Very good point. Bill, you want to go next?
Yeah. So if the game is, you know, we're skating where the puck is going, right? That's the common phrase. The puck is pivoting exponentially faster now. So parting words is keep looking at the market, keep looking for the value, keep looking for that problem that you're trying to solve. Prediction, I think in general, AI is super cool and it will take us to the next, you know, stage of our evolution. But we are moving fast, and we will have prediction is we will be touching our Oppenheimer moment in the next 10 years, and where everybody's gonna have to stop and go, uh-oh, we got to do something different, right? It's scary, but I think it's just gonna be it's almost imminent. Like it's just a natural part of this arms race that we're also feverishly on. It's gonna happen. So.
Yeah, a very good point. And Seren, you want to go? You're the last one.
Yes, I think from my side, probably more like advice for founders or entrepreneurs is really to think big. Even if the capability of the AI is not yet there, then it's really developing so fast that you know, now is time to have the big thoughts, and you know, the AI will probably follow soon, because a year ago we didn't have it doing the things that it already does. So if you have those thoughts and you have prepared for it, then you will be faster on the market in general. But as predictions, I'm not sure if it's a prediction. It's just like natural human behavior is that we will probably see like really going to the extreme with automation, like, you know, that, you know, let's send automated reach out to investors, and the investors have their bots responding back to the startup bots who are looking for fundraising. So it's bot to bot, and then, you know, everything is automated, everything is super efficient, and the human element is a bit lost. But hopefully in probably faster than 10 years, we will find that balance between that super efficiency and the humanity. So to have that element of building relationships with people rather than having a bot-to-bot conversation and then making decisions based on that.
A very good point. Yeah, it's already happening. People downloading their, I don't know, like building their own bots, agents to talk to other people. But amazing points. Thank you so much, everyone, and big thank you to all our panelists for sharing their valuable insights, and to our audience for their thoughtful engagement. Now, as I know everyone is eagerly waiting for our incredible startups to pitch their companies, I will hand over the stage to Payman to kick off the exciting part. Thank you so much, everyone. Thanks, Seren. Thanks, Christian, Bill, and Sid.